where's the money going to come from to cover these bonds? And that's the underlying problem. Anybody that says, oh, no problem, we're just going to go and raise taxes, well, you're making my case. You have to steal the money. You have to equity strip mom and pop in order to cover off your bankrupt bonds.
Happy Monday and welcome back to Real Estate Mindset. I have our community expert, Mitch Vexler, here today, who is, just in case you guys forgot, a seasoned building developer, not just in residential real estate like lots and homes and things like that, but also conversions and also commercial real estate. But in addition to that, you guys remember, Mitch is an expert in quantitative financing, which means he doesn't have to trust people. He can look under the hood and use the math to tell us whether or not, within reason, something is true, something is honest, something is sustainable. So Mitch, thank you for your time, sir. The viewers are about to get something insane right now. But before we go into the overwhelming value on property taxes, bankruptcy, how to do something about that, how are you, sir? And happy Monday.
Happy Monday. It's been a long handful of days, but we went down a rabbit trail on Friday having to do with the bonds, and we'll get into that shortly. But I just want to bring the point to everybody's attention that we're trying to connect all the dots on all these different levels and how they interplay with each other. And I hope that by the time we're done this video today, people will start seeing how the circumstance actually affects them and every real estate tax owner in the United States.
Yes. And not only are we going to do that today, and for anyone that finished this entire video, you're going to walk away empowered and aware. But before I get into our first segment, Mitch, and I go over the bankruptcy stats, I want to catch up every new viewer of this channel. We've had a lot of new viewers, so we're going to catch everyone up today. But before I do that, Mitch, I also don't want people to forget why we've aligned with each other and why I back you up and I support your goal. I believe in your goal. I want to be a part of your goal. I want to be a part of your mission because it helps America. Can you tell the viewers before we start our first segment, what's the goal here, Mitch?
In reality, what we want to do and what we wish to achieve is creating an army of people who can stand on their own 2 feet in front of these ARB hearings, at the Appraisal Review Board hearings, and state, no, these are the comparisons. You do not have the unilateral right to pick comparisons that are not comparisons under the definition of law, which is a requirement of USPAP, Uniform Standards of Professional Appraisal Practice, and the state's property tax codes. When those entities through the central appraisal districts ignore the law, then the property taxpayers must take control of this situation. And that's why you've got the free course for that they can start to rely on and say, okay, this gives us the ability to explain to the ARB panels, here are the real comps, here is the real value. So the goal is to build an army. Why? Because that army can literally bankrupt the CADs themselves. If you can imagine, in the case of Denton Central Appraisal District, if you go from 7,000 protests on value per year to 14,000, the CAD doesn't have the horsepower to do it. And it's the same thing if you have to go past the ARB process and you have to file a lawsuit. Well, at Denton Central Appraisal District, there's 508 lawsuits filed per year. If that gets doubled to 1,000, they don't have the horsepower to do it. There's more than one way to skin the cat. Breaking the CADs is one option. Past that, obviously filing constitutional lawsuits, et cetera, such as what we're doing, is the ultimate next level up in order to kill this off. But make no mistake, I cannot see any other way than eliminating the real estate property taxes, because this corruption is so systemic. It has just ended up in the equity of mom and pop being stripped. And the reality is no balance sheet for mom and pop, and this has got to stop.
Yeah, and Mitch, not only am I going to do everything I can to help build that army, it's a righteous army, it's an American army. Not only am I going to help you, I'm going to help lead that army as well, sir, because I know it's a very, very difficult thing to do. You guys will be getting your emails, your comments. We're going to wait to the end of this video, but we're going to read about 4 of those comments that we've got, and we're going to explain and catch you guys up. But as far as the data, here's where I want to start you guys so you guys understand what we're talking about. Let's start with bankruptcies, because as the title says, property taxes specifically are skyrocketing so much, it's bankrupting current homeowners. Now, this is a recent data on bankruptcy, in September. So this is a September report. Our analysts of the bankruptcy statistics updated to September 2nd. Now, here's what I really want to talk about right here, you guys, because Chapter 13 bankruptcies have to do with home ownership. Chapter 7 is not something you can file generally if you want to keep your assets, and generally your assets are your houses. So we look at Chapter 13 to try to figure out, is there an issue with home ownership? Now, obviously, bankruptcy Chapter 13 can be in lieu of foreclosure or in lieu of loan modification. But here's what this says. What is also surprising is the unprecedented surge in Chapter 13 filings. Chapter 13 cases often filed by wage earners aiming to retain their assets, such as houses and cars, are particularly sensitive to interest rate. The strong jobs market, are you serious? Okay, if you believe it's a strong job market, I do not believe it's a strong job market, which means, to their point, it's even worse if the job market's not strong. Could be the silver lining, enabling more wage earners with regular income to fund a repayment plan, thus pushing up Chapter 13 filings. To pinpoint exactly what the issue is that Mitch and I are talking about, this is a great way to understand what's happening. Now, I'm in a completely different county than Mitch, and look at this. This is an active listing, okay? You see that right here. This home, again, you guys, is actively on MLS right now. They are trying, this is listed for, let's round this up to $330,000. So this home is listed for $330,000. You see that right there, and it's been listed for over 3 months, 91 days. The issue here, guys, is they can't even sell this house for $330,000, but look at what they're being taxed on. They're being taxed at $368,890, and that's as of 2023. Fast forward to 2024, they can't even sell for $330,000, so they're being overtaxed by almost $40,000. And look at the tax rate right here, Mitch. Okay, it's not a small tax rate. We get hit hard here in Harris County, Montgomery County. The tax rate's 3.1779%. If you've been following along with us, you should know that the Central Appraisal Districts, that's the CAD, is coming up with values, at least in our jurisdictions and many other jurisdictions around the nation, because we've got up to 48 different states to reach out to us, including Canada and New Zealand. The Central Appraisal Districts, most of them, all of the ones that we've seen, are not using the required math called USPAP, which is Uniform Standards of Professional Appraisal Practice. All right, that's the math. Now, in addition to that, standard deviation is to be used. None of that's being used. So we've had multiple people come forward, multiple whistleblowers come forward, suggesting that the way that they're getting these values, they're backing into a budget. And if they can't back into a budget with assessed value, they will change the tax rate on you. So, Mitch, can you go into anything I missed, anything I missed as far as what we want to catch people up to before we dig into some pretty crazy value?
Yes. Can you put that one chart back showing that overvalue? I want to point something out to everybody. Here's the problem. So if that land was truly $50,000 on a typical builder's markup at 5-to-1, the value of the home would be $250,000.
But it's not, is it? It's a lot more than that. It's 308. So the value of the home is right here. Just for the viewers, it's 318. So you're saying that it's about $68,000, dollars over assessed. Is that what you're saying?
Well, in reality, yes. Right. So if they're using actual comparisons of the land, so that $50,000 would be a $250,000 home being a new home. If they say, well, a new lot, by way of example, is $80,000. Well, the value of the home would be $350,000. So it's a 5-to-1 multiple, is standard in the industry. It has been for as long as I've been in the business. Okay, so clearly, Houston, we have a problem.
Oh, Mitch, Houston has a big problem. And for the viewers, you guys could do the same thing that I'm doing by accessing your market's active MLS and then go to the Central Appraisal District on those same properties. And all we're showing is just one property that's active. We're not even talking about, the millions of properties that are overvalued and the homeowners have no idea that they're overvalued. But again, this is proof positive market value from the Central Appraisal District, 368. So Mitch is saying it's overvalued by over 60,000. If we take a 3.1% tax rate, $60,000, that's over $1,800 a year in fraud. These people are paying $1,800 in fraud and overvalued taxes. It's an absolute crime. Now it gets worse, Mitch. I'm going to play this video for you, okay? This video is on a task force that is presenting ideas on how to help homeowners that are struggling with property tax. And this is in Cincinnati, Ohio. And I'm only going to play a few seconds of this, but I think it's absolutely shocking. It's going to go in again to the task force and what they found.
According to the task force, 50% of all properties saw an increase on the latest tax bill, while 5% of those saw an increase of 100% or more. The task force says the county hires a private contractor to determine tax rates using a specific algorithm based on the home's sale price and not the appraised value.
That was only 30 seconds, but a couple points I want to bring up, and then I want you to just to knock those people out. Number one, 5% of the properties had 100% increase in assessment value. There's zero math, absolutely no math that can justify a double up in 1 year. Number two, just so we really understand what's going on here, the Central Appraisal District hired a private company to create an algorithm to value properties. My question, Mitch, is there any law that allows them to come up with an algorithm and to use an outside company to value the taxpayers' properties? What are your thoughts here, sir?
No and no. And further to the point, if you're going to subject the taxpayers to an outside entity to determine values, then why exactly does that Central Appraisal District even exist?
Got him. Good. I mean, here's the thing. That seems like Mitch has been talking about a criminal conspiracy to defraud homeowners. To me, what I'm trying to show you and what we're trying to show you in that clip is, look at how bad it is. And remember, that's not even in Texas. That's in Cincinnati, Ohio, guys. But here's the thing. It gets worse. Let's go and take a trip now to Boston. This article is titled, and again, this is in Boston, Wu pitches lawmakers on commercial property tax hike to save homeowners money. Just going to read two paragraphs, Mitch. Just two paragraphs here, okay? Boston Mayor Michelle Wu took to the State House Tuesday to pitch her plan for giving the city the power to temporarily increase the commercial property tax rate. I don't think they realize that still affects the residents because haircuts, meals, all of the things we've already went over with the viewers. I mean, holy smokes, this continues. The measure was met with many questions and some skepticism from lawmakers on the Joint Committee on Revenue during a nearly 3-hour hearing. So she's trying to get money. They're probably broke. They're probably broke and they can't figure out where to get the money, because if they try to get the money from the homeowners, then the more homeowners are going to become delinquent. This is all about taxes being delinquent. Now, Wu introduced the idea back in April, arguing that it is a necessary step for Boston to take in order to prevent what could be a sharp tax hike for residential property owners. A lot going on here. Office vacancies created by the shift to remote work have contributed to falling commercial property values, and Wu says this plan is the best way of preparing for future declines. So, Mitch, what they're saying here is they want to go after mom and pop businesses that already have a high vacancy rate. They want to go after mom and pop businesses because they're not getting enough taxes from mom and pop anymore, because mom and pop are going bankrupt. The vacancies are skyrocketing. What are your thoughts here, sir?
Mayor Wu is an economic ignorant. There's simply zero truth in what she's saying. And to that point, she doesn't even know and cannot tabulate or add up the values of the bonds outstanding at the municipal level or the school district level. And therefore, that is what makes her an economic ignorant. Trying to steal additional money from the real estate commercial taxpayers is a fool's errand, because bleep goes downhill. And that will end up costing mom and pop more money when they go to buy ketchup or whatever they want to buy at the retail stores, because the retail has in fact being forced through the fraud that has nothing to do with the real estate values. This is straight up fraud. They will end up having to pay for it. Either way, mom and pop gets hit over the head, and the fraud is exactly what Mayor Wu is trying to promote. She is an economic ignorant.
Yes. because she's not really confronting the true issues here, right, Mitch? She's just trying to get more money.
No, she's grasping at straws saying, well, we've got to get this money somewhere. My point is, no, you don't. You are bankrupt. If this is the point where you're promoting, we have to keep stealing money and we got to go to this pocket or that pocket, wake up. You're bankrupt. Now, let's deal with the fact that you're bankrupt, and then we can find the solutions. We've already outlined them. But you're starting to see, this is across the United States, you are seeing the wheels come off. When people try this type of nonsense, that's the wheels coming off.
You know, what's interesting is she actually, in the government and officials are so good at creating division, she essentially turned residential homeowners against commercial homeowners because she said that if we don't get this, there could be a sharp increase for residential property homeowners. But those homeowners are already bankrupt. The delinquency rate for taxes is skyrocketing. Mitch, I mean, this is nutso. And again, this is not even in Texas. So let's keep going. Okay, let's now ask the question, what happens when you stop paying your property tax, whether you want to or whether you just don't have enough money? And I want you guys to remember, all right, let's take an example of a retiree that's been in the community for 30 years, okay? They can't afford to pay their property tax anymore. They're on a fixed income. The property tax skyrockets. They stop paying their property tax. Guess what happens next, guys? The county, the Central Appraisal District, can sell that lien or that tax deed to an outside hedge fund, to an outside investor. Do you guys remember those get-rich-quick schemes? Do you guys remember buy a tax lien today and get a house? Do you guys remember that? Just in case you don't, let me remind you. Investing in distress, okay? Tax lien investing allows hedge funds and private equity firms to exploit the most poor, elderly, Black and Latino homeowners, leveraging the machinery of local tax enforcement. It gets so much worse. Let me read this. I'm just going to read this one paragraph because I can't handle anymore. I mean, this is evil. But what I'm trying to point out, Mitch, is this is at the hands of the central appraisal districts. They have backdoor agreements with these hedge funds to foreclose on our houses. Listen to this. Earlier this year, the investment firm Alden Global Capital cut a check, okay, I'm going to keep going, for $1.75 million to Cook County, Illinois, for the right to prey on some of its poorest and most disadvantaged residents. This hedge fund, notoriously for acquiring and gutting local newspapers across the country, and more recently, gobbling up mobile home parks, raising rents, cutting maintenance, and laying off staff, purchased tax liens on over 600 tax delinquent properties in the nation's second largest county. In exchange for paying these properties outstanding taxes, Alden Global Capital can charge an escalating rate of interest. So these people are already behind on their taxes, and now they're going to throw probably like a 20% interest rate on there, pushing these homeowners into a situation to where they are trapped with an inability to pay their taxes, okay? If the delinquent taxpayer fails to pay it all back within 2 years, Mitch, they can claim ownership of the property. Mitch, how does that make you feel?
It's a bad business model. They do get an asymmetric return because they're taking extraordinary risk. However, I will point out, who are the investors of the hedge fund? So if the government wakes up one day and says, yeah, we're not going to allow this anymore, then those investors, which would be mom and pop, they're going to get screwed even on that level. So it's a business model that I find despicable. It is the equivalent of hard money lending, which I find despicable. They do exist. They are real. Under the laws of the United States, they have the right to exist. But if you understand what's happening under the hood and how mom and pop is being set up by their own governments through the fraud to allow this process to happen, this is all making my case, every stitch of this.
I want to reiterate what you just said. So this is like someone, let's just say someone that's retired. This is like someone that's retired being forced to get a hard money loan with a 2-year balloon payment on a 25% interest rate. They are forcing homeowners that don't have the money to take that type of financing. They're selling their information to these hedge funds, guys. We got issues, Mitch. We got issues that we need to take care of. And let's go into the next thing, because I asked myself, where's all the money then? All right. So they're ripping us off. There's all this fraud. There's all this corruption, record-breaking revenue. But then again, I ask, where's all the money? And so I want to direct the viewers to this article regarding the bonds. I'm just going to read the first paragraph here, Mitch. This is titled Bond Guarantee Program Capacity Increases Following State Board of Education Action. Now, this is from Austin. Again, this is going back to April 5th, 2023, but listen to this. The State Board of Education, which a lot of people want to go away, has taken steps to address the nearly exhausted bond guarantee program by voting to lower, you guys ready? Think about what I'm about to tell you. By lowering the amount set aside for reserve from 5% to no money at all to 0.25%. This action removing due diligence, this action stealing the money of the taxpayers, this action stealing pension money has freed up, this fraud has freed up nearly $6 billion in capacity, allowing the Texas Education Agency, the TEA, to approve all February applications from school districts and charters seeking to take advantage of the program's AAA. Wow, Mitch, AAA bond rating. That must be real good. And I'm going to ask you in a minute here where the bond's at in a minute. After considering the maturity of guaranteed bonds and the new guarantees approved in February, the program remaining capacity stands at, okay, 5.37 billion. But the problem, Mitch, so they're going to try to do another program to generate 5.37 billion. But this is also just said that they do not have the reserve to pay the existing bonds. Can you please, I need to chill out for a second. Can you articulate what that just said?
The problem is this is kabuki theater. And you can have the TEA and you can have the government-backed bond guarantees in theory. But at the tail end of the day, we have been unable to find one simple answer. Can anybody please give me a list that is the opposite of what I am saying, which is give me a list in Denton County of every single bond that has been issued and or backed implicitly by the government with regard to the school districts and the municipalities. So in Denton Central Appraisal District, there are 67 taxing entities. To this moment, because we went to work on it again on Friday, we have not been able to correlate and obtain a single list in Excel. What we believe is happening based on what we've seen, obviously, is that the bonds are going up like this because they're rolling out in time and they're rolling up the interest rates. They've gone parabolic, which is why at the Tarrant Central Appraisal District, you saw all these school districts show up in mass saying you must increase annually the taxes, not freeze. That's because they're bankrupt. Well, what you just read is one of the documents I came up with on Friday. The reality is that, yeah, you can say there's a guarantee, but there isn't. The implicit guarantee is that of the real estate taxpayer owner. Those who own the real estate are paying for that guarantee to cover the bonds at these taxing entities, such as the school districts. Well, therein lies the huge problem, because we know, based on what we've done at Denton Central Appraisal District, which is quantifiable, that 37% of the home households, be it multifamily and single family, cannot afford the roof over their head and or they are going to go bankrupt. Well, that's 37% of that population. Over 60% of the household owners cannot afford what is deemed the median value of a house at $514,000. Where's the money going to come from to cover these bonds? And that's the underlying problem. Anybody that says, oh, no problem, we're just going to go and raise taxes, well, you're making my case. You have to steal the money. You have to equity strip mom and pop in order to cover off your bankrupt bonds. You, the politicians, created this, and that goes full circle right back to what you were talking about before about the Chapter 13s. If you go and look at the Itasca School District, there's clearly grounds to throw that thing into Chapter 9 yesterday, never mind today. So when they're doing off-balance sheet financing, They're doing on-balance sheet financing. Nobody knows what the hell the spaghetti bowl of bonds really is. And we can't tabulate it, and we know what we're looking at. We simply can't get the base data because they say, well, we weren't involved. I, the supervisor, wasn't involved in that time, and I really don't know. Well, here's your problem. You're on the board. You signed an oath. You are the party responsible in law. That goes for the same thing for the chief appraiser. You can't say, I'm going to claim ignorance because I don't know. That's your job. And if you don't know, get the hell out. You're the one at the tail end of the day, these supervisors, the chief appraisers, anybody that signed an oath, that oath says to protect and defend the Constitution of the state of Texas and the United States of America. It's a third-degree felony when you breach that oath. These problems of those documents that I sent you on Friday, which we can put up on the website underneath this video, this stuff's horrifying because it's not quantifiable, more than likely by intent. And if anybody's out there that says, okay, I disagree, we've got the proof, great, perfect, turn it over. I would be thrilled to analyze it. Prove me wrong. I'd be the first person to stand up and say, hey, I got this part wrong. Yes. But so far that hasn't happened. And all this that's now happening through these documents, you just look at this and say, wait a minute. It is literally proving my case that these entities are bankrupt. Never mind what happened in Tarrant Appraisal District. This is happening everywhere. And I spent several hours between yesterday and today, and we'll get into some of those questions, answering people's questions. And it's coming in from the United States. It's coming in from everywhere. I mean, it's astonishing. There was over 700 questions that flowed through here. Yeah. And there's a lot of correlation between them, but you can clearly see the patterns that these entities that claim to be in the bonds or were raising bonds, they're bankrupt.
Right. And they're bankrupting us because they don't have the money. So they're like, to the last dollar, let's spend everything. Let's bankrupt as many people as possible. And then we'll go bankruptcy, when the reality is like, leave me alone, go bankrupt and fix your problem. But, when you're talking, Mitch, I'm thinking the whole time, again, to the viewers, Mitch is a mathematical genius. His job is to use math and to research. And what this man is telling you, and I hope you understand this, even with his intellect, his research, and he has a lot of resources, he still cannot find where the bonds are. He can't find and tell us how much bond debt does Denton even have. There's no transparency. And it leads me to ask this next question, Mitch. How is that possible? We're paying for it as the taxpayers. Again, to the viewers, the bonds are like debt. Okay, so people buy the bonds. The school district says, we'll pay you back this much money and some interest on top of that. But they don't have that money, Mitch. The fact is if they had to pay those bonds back today, they can't. Even if they sold all of their assets, they sold their buildings, they still can't pay it. How is this possible?
Yeah, LISD as an example will claim, well, we don't track all these bonds, even though they've got their own spaghetti bowl of bonds. Bonds are, in theory, trackable through what's called QSIPs, which is the actual bond code. However, like I said, we went back 3 years. We couldn't find a single bond that had been paid off. I don't know very many people that have the ability to go back 10 years and come up with a list of all those bonds in order to track it through on a spreadsheet. And it's not just at the LISD level, right? In reality, it's at all the taxing entities levels. Now, you can say the municipalities take bond money and then they create assets, they build roads, et cetera, et cetera. That's true. However, the public should be able to determine what is fat that should be removed from the system versus what becomes an asset. And under the hood of the school districts in particular, the fast way to figure this out, the truth, is to look at the overall cost on a 10-year basis per year as compared to the student population per year. How much does it cost to educate a student per year? And I'm pretty sure you will be horrified when the world wakes up and sees that number, because that will show you exactly how much fat is in the system. And more than likely, that is exactly why they're playing hide the potato. They don't want this information coming out. And even for them, on their behalf, like if you look at LISD and the spaghetti bowl that they've got, I believe it would take a team of forensic accountants 60 days to go through and unwind this stuff, because it's different timelines, different interest rates, different underlyings in terms of, is it a maintenance bond? Is it a roof bond? Is it a bond for a stadium? To be able to analyze that and truly get the picture is very difficult. Now, multiply that problem times 67 taxing entities. However, That one number, by breaking it down, how much does it cost to educate that student? Not what they're telling you. What they're saying is, well, it'll cost $23,000 a year to educate a student on average. Now, I'm not asking what it's costing to educate. What I'm asking is, what are the bonds outstanding?
Yeah.
What are the balance sheet issues outstanding as compared to the amount of students in that geographic vicinity? Now we get to the truth.
And that is probably something extremely scary. And I would like to see that, like, per student, how much bond debt. So like one student's walking in the campus, how much bond debt is that individual student carrying inside their backpack? At our expense, again, the property owners, and it's not just the property owners. I keep making that mistake, Mitch, and I say it's just the property owners. It's not. It's literally every single person that is in that community, because it affects every single person. Grocery stores, gas stations, we keep going over this. And I just, one more time, when we don't pay our school taxes, they send our information to hedge funds who force us into a hard money type loan that is designed to force us out of our house when we don't pay our school bills. And that really frustrates me, Mitch, because I pay 2 school bills. My children don't even go to public school. And I pay a lot of money in taxes. I'm in Harris County. So I'm paying for public school. And the reason I don't have them go to public school is I just don't trust the system. I think that in public school, we should be learning about credit, resumes, how to get a job, not half the stuff that they're teaching. That's a story for a different time. But these agencies, these regulatory agencies that we have an assumption that we should trust, are not trustworthy at all. And so that brings me to the next point, Mitch. Sallie Mae. Do y'all remember Sallie Mae? Sallie Mae was one of the biggest school loan providers. They got caught taking the taxpayers' money and paying their CEOs. They got popped for that. And they just changed their name, Mitch. They changed their name from Sallie Mae to another company. And you know what? Let me show the viewers the issue. Large student loan servicer banned from service, ordered to pay $120 million settlement. This is from yesterday, Sunday the 15th. My man, Tyler Durham. I don't know. I think that's really Mitch. I don't know, though, for sure. I can't prove that. But, you go into this, the CFPB estimates that hundreds of thousands of consumers may be eligible for redress and settlement, but the agency has not yet determined the precise number of consumers or the amount each individual will receive. They changed their name to Navient right here. You see that? But for years, their top executives profited handsomely by exploiting students and the taxpayers. Mitch, that sounds just like what happened with TARP, the Toxic Asset Repayment Program, I think is what it was called. I mean, the CEOs took the taxpayers' money and literally billions of dollars that was supposed to go to homeowners and to help them instead went into a select few's bank accounts. What is your opinion on these agencies, and how do you think the elimination of the Chevron doctrine will help us fight back as consumers, if at all?
Okay, so the first thing is, by changing their name, the name was changed not to protect the innocent, but to protect the guilty. First thing. Second thing is, if the settlement was $120 million, can you imagine how much money they actually stole? Third thing is, with regard to Chevron deference, in reality, the government's doing what they're doing for the sake of the government is the abject definition of tyranny. And the reason why Chevron deference should never have existed, and it's good that it is now no longer in existence, is basically for the same reason that I'm stating, which is these dollar amounts on these bonds have got to be visible. Otherwise, you are in fact ripping off the public because they can't see what you're doing. You're doing it on purpose. This is done by intent. And to that point, when we were talking about the bonds a second ago, when you were raising that issue, I just want to point out, it's not just the bonds, right? It's the bonds plus the off-balance sheet debt, off-balance sheet, plus the on-balance sheet, as in the 313 agreements that we know, in the case of Itasca, are a huge problem. In other words, enough is enough. Show us the true liabilities. I would be thrilled if somebody just hand me a spreadsheet for the last 10 years of all these bonds in Denton County, be it at the municipal and the school district level. That would be great. Just give that to me so I can total it up, see that it's gone parabolic. I'll break it down and I'll do it against the student population. Easy, no problem. However, I would still recognize that there's off-balance sheet issues as well as on-balance sheet issues. And unless there's notes to those balance sheets, you can't figure it out. And that can only mean they're doing it by intent. They believe that they can take people's assets in perpetuity. But the problem is, no, you can't. That's the abject definition of socialism. And it works until you run out of other people's money, which is already happening.
Well, I mean, they are taking that, and they're taking it from people that, have apathy and are desperate, Mitch. So I know they shouldn't and they can't, and it's against law, but that doesn't matter because they still are, because not enough people are fighting for their rights. And I want to go in now. I'm going to show the viewers these 4 questions. All right. I told Mitch, let me get 2 questions, but Mitch, I love you, man. And I'm so appreciative for how you're articulating things, how unselfish you are to help people. I really miss that, man. And I love that you're part of that circle now. It's very difficult for me to find people that can explain this with enough patience to do so, right? Because there's a lot of people that still don't know, that attack us. And then someone that's not saying these things to profit, right? That drives me crazy. But let's go into the 4 things right now. And I want you, and I'm going to throw up this email. Do you want to kind of summarize this first paragraph here, Mitch? I think this is a great, great paragraph.
So I wanted to take this up one notch to make an argument. And the argument is, for any central appraisal district, including Denton Central Appraisal District, Mr. Spencer, based on your actions and the actions of Denton Central Appraisal District, what is the governor, as in what is the break to stop you from raising taxes on any given year to infinity?
Yep.
Now, clearly, there is no governor under this current system because the governors were USPAP, Uniform Standards of Professional Appraisal Practice, the Texas Property Tax Code, Mass Appraisal Standards, the Texas Constitution under Uniform and Equal, and the Constitution of the United States of America under the 5th, 14th, and 16th Amendments. Those are the governors by law. The problem is that the CADs have chosen to ignore the governors. Well, those laws were created for the protection of the citizens. If those laws are going to be ignored, the people that are ignoring those laws, under those laws, must be punished. My point to everybody that is seeing these videos, you can ask the same question across every single state in the United States. What is the governor to stop these laws from not being adhered to? And if you can't answer that, you've got a problem.
Well, I think we got a problem, Mitch, because they are not answering that, and nor do they even understand the math under the hood. Great breakdown. First question, okay, right here. Appreciate the viewers here. If you want to sum this up, Mitch, this is someone asking, can we do a class action?
So what we're doing with this series of questions, I think it's up to Travis, but I think at the end of all these videos, I think what we're going to try and do is put 3 or 4 questions in, because I've read a lot of these questions coming in. A lot of them are the same. A lot of them have a unique perspective, and because they're in different states. So that's what we're trying to do here. So the idea of a class action, yes, even in Texas, we can do that, even though the judges frown upon it. And at some point here in Texas, we may actually ask for class action status. It is much easier to do in other states. So if you and your friends or your neighbors can get together and say, okay, we're going to take this up another level past the ARB and past the filing of the lawsuits, and you say this is a true constitutional challenge in our state, absolutely, you can do a class action, just depending on what state you're in. So we're not in the process of actively doing it, but it is in the back of our head to ask a judge at some point for class action status.
Do you think in other states that overall it could be a good idea to start class actions against these central appraisal districts?
It wouldn't be just against a central appraisal district. That would be a focus target, yes. But when you start ratcheting up the chain, who received the money, which would be the entities that are writing the bonds, and I would drag them in on purpose. Not that you get the assets and not that you have the right to sue a school district, depending on the state. You certainly can go after the central appraisal district. You certainly can go after the tax assessor collector. There's ways to do it, but every circumstance has to be looked at individually.
And if I'm not mistaken, and I don't want to talk law, but when the case is active, you could subpoena, right, records. Like I could subpoena, let me get all your records for your bonds or whatever. Is that how you would do that, Mitch?
We actually had subpoenas that were ignored through the Denton Central Appraisal District, and it was agreed to actually under a Rule 11 agreement. We asked for certain pieces of evidence that they agreed they would turn over, such as the formulas inside of their software. They never turned it over. They refused. They violated their own Rule 11 agreement. So
isn't that contempt?
It could have been. It certainly would have been sanctionable.
If you guys would have pushed that action, right? Like you could have asked the court to hold him in contempt for not obeying the subpoena. Is that right?
Right. So what'll happen this go around, because now we're in the appellate court, it'll be kicked back to the court. We will be getting the depositions of a couple people that we want. That's all, just two. And we will make demand on that Rule 11 agreement one more time with the idea this time around, we dare you not to turn it over.
Right. And for the viewers, remember, Mitch has a body of evidence. Go, and his website will be in the description. Don't forget, you guys, we got everything in the description. Please go to the description. We get so many comments and questions like, hey, where's the class? Where's the link? What's his last name? What websites? Just hit the link in the descriptions. Literally, it's just like 2 inches down from where you're watching. Probably less than, it's actually, Mitch, it's not even an inch down if it's on the cell phone. Just go down in the description. It's all there, you guys. Mitch, I want to tell people, though, and maybe you know this, maybe you don't, you have done a lot of the upfront work. You've done a lot of that grunt work, outlining certain problems, outlining certain issues and evidence, and you've made that open source. You've literally made that open source. You're like, here, take it all for free. How much money do you think that you potentially have saved people? How much money do you have in this right now? And again, and I'm saying that because you guys, it's very, very valuable, the work that this man has been doing.
There's a massive amount of money, and you can see it when you go to the website at mockingbirdproperties.com/DCAD. The underlying point, which you just raised, is really important. As far as I know, we are the first group ever to correlate the math as required under USPAP to the Texas Property Tax Code, to the Texas Constitution Uniform and Equal, to the Constitution of the United States of America. We've tied all of that together. Most of these lawsuits that have come in our way have not gotten to the depth of the problem and quantifiably tied the economic damages to what it is that they are filing. And in reality, when I wrote an amicus brief to the Supreme Court, it was literally hitting on that issue. And several attorneys I sent that amicus brief to in Washington, 3 of them responded with, I wish we had this information. Because when you have the math on one hand and you've got the law on the other, a judge would have to be a complete moron not to understand how these two things are interlinked. What we've done, which is available for everybody on the website to see, we're giving you our evidence, all of it. It's all there for your attorneys, your accountants, whatever anybody wants to take this up another level to file. At the property valuation level, there's the free course that you are putting out that's almost finished. That's at the property valuation level. If you want to ratchet it up another level and say, that's it, we're filing suits and we're going to take it all the way through, we're happy to give that information to any accountant, any attorney, anybody who wants to use the information in order to tie their own circumstances together. And that's why we built the website. It's available for everybody to use. It's free, just like your course is free. Nobody's making 10 cents on this. So that is the underlying point to all of this. The goal, again, build an army of people who can stand on their own feet and not shrink away from the lies that they will be told at these ARB panels. They just make stuff up. One other thing, if you don't stand on your own 2 feet and you don't protest, these central appraisal districts and these ARB panels will use that information against you in the following year. They will literally turn the tables on you and say, well, you must have agreed to this value because you didn't object. It's a BS line, but I guarantee you that's what they're going to do. We've seen it.
Yep. And you guys, and that's where we come in with the lead the army. You can't just make an army, you got to lead the army. And if you think I've been going hard to the paint, Mitch's been going hard to the paint, just wait until 2025 starts and people start getting their bills. My intention is to train, I'm going to have to pray on this a little bit, is to train realtors again to help the community with these courses. So if you're a realtor, take the course yourself and start helping your community. Go to your HOAs, go back to your broker and teach people like, hey guys, here's how the math should work. And once we understand how the math should work, we can better protest our values. And like Mitch is saying, if we don't protest those values, they're just going to jack it up. And then they can use that assessment value. They're not supposed to, and it depends on the county, but they can use that elevated assessment value kind of as a comp to overassess another property. Unless they go, like we saw the video, Mitch, where they're hiring an outside company to come up with their own algorithm. Are you kidding me? So on that algorithm, what's to say that they don't have a budget that they can back into that algorithm, and then the algorithm works with that budget to manipulate the numbers in a way to hit that budget? We don't know that. And where's the bonds? How much debt do they have? Why would I want another bond if they have $2 trillion in bonds that are delinquent and they don't have? Mitch, I guess what I'm trying to say is let me read another question. You mentioned there was no uniformity on bonds. Please explain.
Okay, so bonds can have a dozen different applications. Well, there's a bond for a roof. There's a bond for maintenance. There's a bond for mechanical systems. There's a bond for a stadium. And every one of those bonds has a different term of length. They have a different amortization. They have a different payoff schedule. And it's a very difficult process to take all that and ferret it down to figure out how much the bonds are being rolled up and rolled out in any given period of time, other than to make a statement, this is what's happening. And that is why that one question came in. What do you mean by all this? Well, the best description is it literally is a spaghetti bowl of bonds. It's a difficult thing to handle. I dug into LISD. I even have a 267-page document that they put out. It's a PDF. When they go to raise a particular bond, and all that document says in 267 pages is, we know nothing, we saw nothing, we heard nothing, give us the money and good luck to you. Because at the tail end of the day, they don't have the money. They're broke. The thing they have is the implicit guarantee of the real estate taxpayers. That's all.
So they have a guarantee from themselves then. So I'm guaranteeing myself if I'm a taxpayer, because the guarantee is
well, yes, except that you don't have any assets. See, it's one thing where you have a city and the city says, I'm going to spend this money on roads, or I'm going to put it in a library. There's an asset there. Okay, there aren't any assets, physical assets at a school district. You can say, well, the school is an asset. You could say that, but if that had to be sold off, that school's coming down because the land is worth more than the school. So then you look at the land, well, the lands have bonds on them. So this thing is levered, and in reality, it's probably hyper levered, right? So there is a direct correlation. I want to point out here, your equity is being stripped at the same speed that the bonds are going up. They get that money from somewhere. This is your equity here. This is the bonds here. They're both equity being stripped parabolic, bonds going up parabolic. Roll out and roll up.
You know, we haven't even talked about the biggest asset of the schools. The biggest asset of the schools are the children. They're the kids. And in my opinion, the school districts should not be investing in things like solar farms and all this other nonsense. They should be investing specifically and solely and only in the education and future growth of our children. Why aren't we teaching about credit reports? Pretty important. Why aren't we teaching about resumes? Pretty important. The financing, real estate, the Federal Reserve. Why does no one know and no one taught about the Federal Reserve? Last question from a viewer.
Yeah, before you go there, I just want to
Yeah, I knew I'd, yeah.
talk about that for a second. That is literally why on Friday I came up with this idea that the only thing that truly matters is the bonds divided by the student count.
Yep.
That's it. Because everything else past that one number is pure manipulation, pure fraud, and pure fat.
Well said, sir. All right, one more question. In our area, we have school board trustee turnover. Again, in our area, we have school board trustee turnover. Can you start by explaining what that is? And then can you go into that, please?
Yeah, you have that problem in a lot of government entities right now today. That problem, I happen to have knowledge firsthand up in Canada, where a lot of the people in the engineering department, people who knew and been around for 20, 30, 40 years are now retiring, and young people are coming in. They don't know anything. And that makes getting business done extremely difficult. On the ARB level, they have term limits, the appraisal review board. So once somebody understands what's going on and they can see the level of fraud, they're termed out. On the upper end level at the school districts, and again, I'm not a fan of any of these boards, but the reality is that people don't stick around long enough. They begin to see the problem and then they head for the doors. Well, then you come back to the excuse, well, I wasn't here during this time and I don't know about this. Well, here's your problem. A, you signed an oath. B, when somebody tells you you're violating the oath and you choose to do nothing about it, here in the state of Texas, you violated Texas Penal Code and you also violated federal law. So if you don't want this type of language coming at you, here's an idea. How about you get involved? You're on the board. You're now being told that you are a person of knowledge. How about you figure it out? And if you don't know how to figure it out, yeah, I'm here. I'm highly accessible, obviously. So go ahead, send me an email. I'm happy to sit down with anybody on the opposing side, as I've offered. I'm happy to do it. I'm very sincere about it. I do realize that there are people that are out there that don't understand how bad this is. But once you know how bad it is, the obligation is on you to get involved and fix it.
Respect to you. There's 100% respect to you. Just let me end this here, Mitch, to the viewers. Remember, Mitch Vexler, go to his website, Mockingbird Properties. It has all of the evidence, a whole bunch of court documents. He's put a huge amount of expense to make this open source. So don't forget to do that, guys. Don't forget to go to the description. All of the links are there. We'll probably add a document link as well for data for this video. And then also the course. The course is 90% done. My intent with that course, in addition to bankrupting the CADs, is, and I got to be careful saying this, Mitch, okay? I'm being facetious. So do the regulators. I'm being facetious. Calm down. But I want to help teach you the best I can to be a little junior appraiser. If you take these courses right now, and again, it's to chapter 7. I've only done in chapter 6. Chapter 6 is a beast, guys. It is a beast. I made a brand new form based on 22 years of my experience to give back to you to fight these CADs. So we will lead you. We do appreciate you. Everything is in the link. Mitch, as always, sir, I appreciate your time, your expertise, and the way that you're able to articulate the problems for everyday Americans. And sir, I thank you for that. Now, if you guys are out there investing in real estate, you guys already know you probably shouldn't. I think you're absolutely bonkers, but we do wish you luck. And of course, we hope you win.